So first we'll start with just sort of a brief overview of the space in general and sort of where we fit within that space. We'll get into a little bit of the products and services that we offer today, but more importantly, kind of how we think about ourselves as a business, what it is that we exactly do, where we're going to fit in, call it in the next 3 to 5 years. And so let's get into it. So obviously we wouldn't be here if we didn't know that this is a growing industry. So I like to throw out a couple different stats that I think really play nicely into sort of the tailwinds of the overall market. If we agree that in 2020 we're going to be a $20 billion industry in the U.S., by right now there's a $45 billion black market that exists. So if you just think about it over the next 5 years, if we get that black market legit in the U.S., what is that? That's a 28%, call it 30% annualized, sort of growth rate of the overall sector in general. So obviously it's a really exciting time, and that's assuming really that consumption stays the same. Now we obviously agree that consumption is going to grow. How it's going to grow, we have positioned our portfolio around primarily vape and extracts. So to give you an example, right now in the US, we have about half of the country consumes alcohol, 10% consumes cannabis. So as we see that gap closing, that's going to basically be because new entrants are being exposed to the plant or the medicine in new ways. And so how are they going to be exposed? It's not going to be traditional sort of hitting the bong. My mom isn't going to start twisting up joints right now. She's a little late in her life for that. So she'll probably take a gummy, or she'll enjoy maybe a vape pen that has some unique fun flavors to it. And so that's what we're seeing right now. California, for example, last year, vape and extracts actually surpassed traditional flower and pre-roll in terms of consumption. So, we see that trend. I mean, obviously trends generally start on the coast and work their way in, and that's how we positioned our business right now. Obviously, a lot of public support behind it, so this could be a political hot button, over the next coming years. The industry, really just where we stand today, just touching, the growers, the processors, and the brand owners, really the top three there make up about 90% of our business. Distribution, obviously highly fragmented in the States because you can't distribute across state lines, so we don't do a ton of business with distributors. And then dispensaries, really, we kind of got out of the retail business. The only time we really touch dispensaries directly is if we're dealing with a multi-state operator. So I would say, we're a B2B platform, so most of our business is done in those top three buckets. What we see, as you guys know, the regulations are highly dynamic. They change state by state. So we're sort of counted on as a partner from our large multi-state operators, for example. If they want to get into a new state, if they're trying to expand into Nevada, they want to understand that, hey, look, their SKU is going to be compliant in the state of Nevada. That's where we come in. We know, all the rules and regulations. We have an in-house legal team that, helps with things like the opaqueness of the jars, whether it needs to be child resistant or not, what the labeling requirements are. These are all things that sort of, in our opinion, distract from what the business is supposed to be doing, not our business, but our customers' business. They need to be focused on building their brand. They need to be focused on getting the best product to market at the best yields. They don't necessarily need to be worrying about the compliance and sort of the nuances of the regulations state by state when it comes to things like packaging, when it comes to things like on the vape side, whether there's some sort of heavy metals test, things that we deal with every single day, and we publish thought leadership pieces about. We have white papers available to our customer base saying, look, here's the latest regulations, here's what you need to do to prepare your business for it. Oh, by the way, we can help out. So who we are, obviously we're a publicly traded company, but I always, back in my business classes, you always get the question of, McDonald's. People think McDonald's is a restaurant, but in fact they're a real estate play. How does that apply to Kush? I would say that people think that we're a packager. People think that we're a manufacturer, when in fact, I would argue that we're a service provider. Okay, so using that restaurant analogy for just a quick second, when you walk into a restaurant, we're going to be the host or the hostess at the front. We're going to be the really nice server that waits on you. We're going to be the awesome food runners and bussers for you. We might even be sort of the chef that is, supposed to be cooking but doesn't actually cook. He just literally walks around and greets people's hands to make sure they're having a good time. We're constantly updating our back of the house. We're finding the best manufacturers for a lot of our products and SKUs. We're building out long-term defensibilities with our IP portfolio. But really, customers come to us because we're able to offer literally the best price, because we've hit volumes that have allowed us to hit scale. We're candidly selling to some of our competition on a sub-distributed basis. So, for example, if you look at our 3-ounce glass jar, we upgraded our facilities overseas, and so you literally see Tabasco come off the line, followed by a Kush jar. Okay, so what does it mean to run a business when you kind of hit scale? You can go and throw around volumes and negotiate better terms with your partners, your manufacturing partners, and from there, that's how we see ourselves being able to grow margin sort of over time, rather than going to our customers and mandating that there's going to be price increases, et cetera. So using that analogy, I would say that we are a service provider that offers the best product, the best service at the best price to the cannabis industry today. So again, I kind of touched on where we play, but again, those top 3 are the ones that we should be focusing on. Holding company structure quickly, we have our parent company, and then we have, I would say 98% of our business is coming out of Kush Supply. Coletto we don't generate any revenue out of Coletto. They're simply our R&D arm. So they're developing things like, talking about biodegradable, compostable plastics. One thing that we're hearing all the time from our customers is that, hey, look, you guys are selling a lot of packaging and it's ending up in the ocean or other places. What are you doing to solve for that? We have some stuff rolling out this year that's literally going to blow people's minds. We're talking about plastic that can turn into soil in like 180 days. It's pretty cool stuff. So more to come on that. Facilities right now, we've been sort of geographically diverse in all of the major medical markets. We currently sit on 6 distribution centers. We have some more coming online over the next 3 to 6 months. We're looking at Northern California, places like Michigan, Mid-Atlantic, and Canada. How we think about growing out that footprint. So I think Massachusetts is a tremendous example. We all saw Massachusetts a couple years ago pass recreational, and we're like, oh my God, this is going to be a massive market in the Northeast. We need to get involved. We threw up a 66,000 square foot facility in Worcester, of which we were, I don't even know if I'm saying that right, but forgive me, I'm from Oklahoma. But we were utilizing 6,600 square feet of that 66,000 square foot facility. And we kind of ate that overhead for months and months and months. Why? Because the rollout, as you guys know, in Massachusetts was just slower than we had anticipated. So how we've taken that learning, right now, Massachusetts, that bet is paying off. We're literally up 1,000% or 800% year over year. We're doubling the Massachusetts business every quarter now because we do have the infrastructure in place. We're holding the right product for the customers, and we're winning all of that business. But when we think about expanding into other markets such as Michigan, for example, or maybe Florida or Mid-Atlantic, we've kind of changed it. We'll send a scout out full time, sort of figuring out that market, and then trying to time it when we need to build out the infrastructure. But so quickly on some of the products and services, packaging obviously is about 20% of our total mix. It's a variety of different things. So whether it's pre-rolled joint packs, or whether it's jars, whether it's biodegradable exit bags, these are the products and services. So where we do very well is when these companies need to invest dollars into building out their brand. So we have an in-house design team. They work directly with the customer to customize different products. I would say our overall mix, about 30% of our business is custom or hyper custom. The balance is going to be more sort of off the shelf. Vape is a big part of our business. Right now, last quarter was about 70% of our revenue mix. We do partner with C-Cell. We're one of 4 exclusive redistributors of C-Cell. There's a lot of things going on in the vape sector right now. Just look at tobacco, for example, and nicotine. We can all sort of imagine for a second what that's going to look like when the FDA decides to come down and decide that they need to regulate cannabis vape. Fortunately for us, it's 21 and over in most of the states, so there shouldn't be as much issues with, child consumption, et cetera. But C-Cell is tried and true. They are the, call it Mercedes-Benz of the vape category. We got some wind that there was some heavy metals testing going on in the state of California, some regulation that is going to be rolled out at the first part of this year. We were able to test all of our products against all of the competition's products, publish a white paper saying, look, here is the amount of heavy metals in each one of these cartridges, and kind of get ahead of it. And the translation was, we won a bunch of new business because people dumped their sort of third tier or their knockoff vape provider and went with us in C-Cell. I would also say that some of the competition that we have in C-Cell, I said we're one of 4. Jupiter, underneath the Tilt umbrella, is a big competitor of ours. We're really friendly with those people. We have, recently Tilt acquired Jupiter. That has, I guess, created kind of a conflict of interest with their customer base, because if you think about Tilt for a second, underneath the Tilt umbrella is a multi-state operator. We've started to get some customers calling us saying, hey, look, I don't want to buy my pins through Jupiter anymore because technically I'm lining the pockets of my competition. So, that kind of that is our mantra. We are not going to compete against our customers. We pride ourselves on being Switzerland. We're going to walk into any multi-state operator, any regional player, any Canadian LP, and hopefully basically be viewed as a partner, not necessarily an adversary. Kush Energy, I think this is, we've recently combined energy in our natural products division. So why are we in the energy business? That's a great question. Really what we're trying to solve for is the pain points on the supply chain for our customers. So when you think about solvents, talk about extracts, in order to get the oil off of the plant, you're gonna need a solvent. So our energy division, we provide butane, isobutane, CO2, ethanol. With that extraction process, we utilize hazmat facilities across the US and Canada, and really we're solving for that last mile delivery. It does allow us to be innovative in the space. So this year we're rolling out our stainless steel tank. So why stainless steel? Currently on the market through Praxair and Airgas on one end, or your local welding shop or your hardware store on the other end, everybody is using carbon steel. So if we're talking about solvents, ultimately that's going to end up in the final product, and you don't want to be ingesting stuff that's not necessarily clean. Carbon steel tanks, as we know, they chip, they flake. The quality of gas inside of a carbon steel tank is not as pure as a stainless steel tank. Matter of fact, there's a reason why the extraction equipment itself is made of stainless steel. So, what we are bringing to market is a tank specific for the extraction process. That's not something that Praxair, that's something Airgas is doing, because why are they going to make this massive investment in stainless steel if it's only going to be a fraction of their revenue? But for us, we're all in on cannabis, and we're basically tasked with putting out products and services to the market specific to them. I would also touch on ethanol is a big, so with the passage of the Farm Bill, seeing our ethanol pipeline just go through the roof, because ethanol is the sort of preferred solvent for CBD extraction. Natural products is our terpenes. So I love to tell a story. So we partnered with a terpene company that competes directly with True Terpenes in October. So these are non-cannabis derived terpenes. So these are botanical terpenes. This business that was doing about 100,000 or so a month as of the end of Q2 was 600,000 a month. Really it fits really nicely into the rest of our products and services. So if you're going to be buying your energy from us, you're probably going to have a look at the terpene business. You're definitely going to have a look at the cartridge business, the batteries, the mouthpieces, the cartridges themselves. And then you're also going to have a good look at the packaging business. So really a pillar of our growth strategy is A, don't lose customers, and B, cross-sell across the platform. So I think terpenes, our pipeline for natural products right now is massive. Why botanical? Why non-cannabis derived natural products? For us, it was simple. Look, it's all manufactured in Arlington, Texas. It can be shipped across state lines. So if you're trying to build out a brand and you're trying to have that consistent product in each one of your geographies, having a terpene that's not cannabis derived allows you to make sure you're using the exact same stuff. So your extraction process might be a little bit different in New York than it is in California. This sort of solves for that. Supplies, yep, we have a bunch of different supplies, so we'll skip that one. You know, all in, just so you guys know, I mean, we're looking at around 1,500 SKUs, and I'll show you some data in a second of like sort of what that means and our typical customers, how many SKUs that they purchase from us on average. Services, I think, is an interesting one because, you know, again, I touched on the proprietary design and stuff with Coletto, the ability to, you know, customize a project, enter into a joint IP agreement if we're talking about a Canadian LP, or really, you know, revolutionizing stuff from the biodegradable side. You know, when you go through, we're talking 3-6-month processes with our customers in a room trying to figure this thing all out. And that's really sticky business that, you know, the process right now is our customers, what we're seeing is they're growing up. And so winning business now involves, you know, typically some sort of supply agreement. The lawyers are involved. You got the R&D team involved. You got them committing to minimum, the size of the orders are just absolutely massive. So, you know, it is changing for, you know, in a really good way. And, you know, we have the infrastructure to sort of support it. Intellectual property, right now we have over 40 articles of intellectual property that we sell to our customer base, and that's growing every single day. So that's just a couple different examples. Just FYI, this is available on our website, so if you want to download it. Addressable market, how do we think about our opportunity and all the different businesses that we play, okay? I like to think about walking into a dispensary and spending $50, okay? You go in a dispensary, you spend $50, you might get an eighth of weed, you might get a gram of oil. You know, consumption patterns, this is based off of the latest, I believe this is headset data. 30% of your dollars are going towards traditional flower, 30% is going towards vape, 25% to concentrates, and 15% to pre-roll. Okay, that's top line. So when I talk about the cannabis market, it's a $20 billion industry. That means there's $20 billion of revenue to be shared at the dispensary level, okay? So for us, you know, if you're gonna buy just flower, you know, we'll sell you the packaging, the supplies, the labeling, and the services. You know, the vaporizers will sell you the energy, the natural products, the vape hardware, the packaging, the labeling, and the services. You know, average it all out, our share, a potential share of wallet for that $50 sale is, you know, kind of broken down there. So if you do a weighted average, we're about 4 to 6% of cannabis revenue is our total addressable market. Using that 6% number, if we're a $20 billion industry today, our total addressable market is around $1.2 billion of stuff that we can sell to them. Obviously, we can grow if we maintain the same portfolio, maintain the same market share as the overall industry grows. That's going to be great. We're also winning more market share every day because what you're seeing is that consolidation really happen. Right now in our warehouse, we hold 40 million or so worth of inventory. Our competition doesn't even do $40 million worth of revenue. So, you know, we're able to grow up with them. How are we doing? Is this me? How are we doing? All right. So moving forward, financial overview quickly, 18 million in cash, record-breaking quarter, raised guidance, 110 to 120 to 140, 150. California, largest market, up 273%. Massachusetts, doubling every quarter. You know, really driving it home. Any questions? I mean, I guess. Yeah. Yeah. Okay. So, who's got a question? Anyone? Do we have time for questions? Yeah.
Yeah, hi. I was just wondering, what's your throughput per hour for your ethanol extraction of biomass?
Oh, of our ethanol extraction, that is. Oh. Yeah, I can. I'm going to defer to the gentleman in the back, Jason Vygotsky, our Chief Revenue Officer.
We don't extract.
Yeah, we don't do the actual extraction. We'll sell you the ethanol. Yeah. Okay. Yes, sir.
To the class action?
Yeah, I mean, typical ambulance chasing stuff. You know, we did have to restate the earnings. I think that's worth talking about here, and it's probably an appropriate audience. So when we enter into an acquisition, Typically what we do is so companies come to us and say, hey, you need to buy our business. In this case, this was primarily related to our vape acquisition of CMP Wellness back in 2017. They come to us and say, look, we're doing $5 million worth of business today, but oh my God, next year we're gonna do 15, the year after we're gonna do 30. How are you gonna give us some sort of appreciation for the fact that our business is in the middle of this hockey stick, right? We say, okay, great, all right, let's pay you up front for the business that you're doing today, your TTM revenue or EBITDA, whatever metric we agree on, and then let's structure the next 24 to 36 months in some sort of earnout, right? So what we were doing is we were basically, and so that earnout is going to be compensated in the form of stock, right? So what we were doing is we were booking that at par, that the value of the stock on at par and booking it to equity, when in fact it should have been per GAAP accruing as a liability that needs to basically be restated every single quarter. That's based on two things. One, the price of the stock at that moment in time, and two, the probability of that company hitting their earnout. All right, so if you follow it back to 2017, just look at the stock price. The stock went down in 2017. We actually benefited a little bit in 17 with that restatement, 1.7 million. And then in 2018, what you saw is basically a run up from $1.80 or so to over $5. The fact that we were recognizing the value of that stock at par based on the acquisition date and not whatever the fair market was at that time, that's what led to the restatement. I will say though that we did hire, purchase accounting. If we had the experts in to help us with that transaction, they didn't catch it. We get audited every quarter because we're SEC, by the SEC per the guidance. They didn't catch it. It was really our new CFO who came on board with public accounting experience. Our previous two CFOs, they didn't catch it. And he's like, look, we're accounting for this wrong. Let's sort of get out in front of it, and this is what it is. So, when you see a big restatement like that, typically the ambulance chasing lawyers get fired up and they try to, get everybody together. But so that's really the process behind the restatement. Cool, yeah. But it doesn't affect cash, it doesn't affect revenue, it doesn't affect margin, doesn't affect cash flow from operations. It's all non-cash, wonky balance sheet stuff. So, any other questions? Yes.
Is there a part of your business, you guys do so many things. Do you feel like you're spread too thin?
I wouldn't say that. Look, if you don't feel like you're being spread too thin right now in this industry, you're doing something wrong. So everyone should feel like they're being spread too thin. And, but for us, we do have a really sort of dynamic team that's able to react. I think, yes, our top line's growing 240% year over year. You think about our future M&A strategy, it probably behooves us to take every available dollar that we have and reinvest it into our core platform. But we are also recognizing that down the road we need to build out those longer term defensibilities. And so there are some areas that we can sort of move or and really recognize revenue from where we sit in the marketplace. I think so. That's kind of how we develop our strategies. Yeah. Any other questions? Thank you guys for your time.